Bitcoin just ripped through a critical level while the weekly chart is screaming strong sell. And the 1-hour chart is more overbought than it's been in 2 weeks. This is the exact setup that destroys undisciplined traders. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end because I'm giving you 3 exact levels you can trade today, with entry, stop, and target numbers that leave zero guesswork. Right now, Bitcoin is trending higher intraday, but we are fading into extreme overbought conditions. I call this a fragile bullish breakout, not a conviction rally. My session bias is cautiously bullish with a high risk of a sharp reversal. Write this number down, 66,261. If Bitcoin closes below 66,261 on the 4-hour candle, the entire breakout structure resets and we flip immediately bearish. That one level is your session invalidation. Here's why this matters. The herd is heavily positioned short because the weekly trend is so powerfully bearish. This move is squeezing them. Shorts are trapped, and the price acceleration you're seeing is not genuine organic demand. It is forced liquidation. Yet, those liquidations can overshoot into a vacuum. Watch that 66,261 floor like a hawk. Let's go top down, weekly straight through to the 60-minute. And I want you to see what the structure is actually whispering. The weekly chart is a strong sell. Bitcoin has been making consistently lower highs since that 109,000 top. The 200-week moving average is way down near 35,000. That's not in play. But the 100-day moving average sits at 73,520 and the 200-day at 79,323. Both are miles above current price. That gap tells you the longer-term trend remains bearish until proven otherwise. In strong sell structures, rallies are sold, not chased. Now drop to the daily chart. The daily trend is neutral. Why? Because we have been oscillating around the 20-day moving average, which right now is at 66,918. Price is currently 66,452, just below that 20-day MA. But we have broken above the key daily pivot at 65,070 and smashed through first resistance at 66,261. That's a level that held as resistance 3 separate times in the past week. Breaking it is a real structural shift, but the question is, can it hold above it and then conquer the 20-day MA? Because directly overhead we have a wall. The 20-day MA at 66,918 combined with the R2 pivot resistance at 67,178. That is a brick wall. The daily RSI is only 44, no momentum extreme yet. The daily MACD is still deeply negative at minus 2,749, but the histogram has been narrowing for 3 consecutive days. Momentum is turning, but it hasn't crossed. It's a promise, not a delivery. Come down to the 4-hour chart. This is where it gets interesting. The 4-hour MACD histogram has been printing higher lows since 3 days ago, while price itself put in a higher low around 62,500. That is a hidden bullish divergence. Most traders completely missed it because they were hypnotized by the weekly strong sell. They were looking for another leg down, and the chart quietly built a spring. The 4-hour ADX is 35. Which tells you the trend is strong, but ADX doesn't tell direction. Right now that strength is fueling the bounce. The 4-hour 20-period moving average is curling up near 66,050, and the 4-hour 60 MA is flattening. That's a short-term trend shift. Now the 60-minute chart. This is where the danger lives. The 1-hour stochastic is pinned at 93.6. Williams %R is at -8, fully pegged overbought. That is not a bearish signal in isolation, but it is a timer, a fuse. When you get a breakout into this degree of short-term exhaustion, the move either accelerates immediately on a flood of new buyers, or it reverses hard and traps late chasers. There is no middle ground. And here's what most traders miss. The volume on this breakout is not confirming. We have lower relative volume compared to the last drop. That means fewer market participants are driving this move. It's thin liquidity running stops above 66,261. That's a liquidity grab, not a conviction breakout. So the hidden divergence is between the bullish 4H structure and the exhausted 1H momentum. That friction is exactly where we build the trade plan, your daily support and resistance numbers. First support is 66,261, the level we just broke. Below that, the pivot at 65,070, then 64,353. On the upside, resistance 1 is 66,918 to 67,178, a cluster zone. Clear break above that opens 68,570, and then 68,570 becomes the next magnet. Those are your lanes. What changed overnight? The U.S Iran interim peace deal. Crude oil collapsed 8%, dragging inflation expectations down with it. The dollar dropped, and risk assets surged immediately. Bitcoin is moving tick for tick with Nasdaq futures. The risk asset shadow is fully alive right now. When oil craters, the market prices out aggressive Fed tightening, and that becomes rocket fuel for crypto in the immediate term. But here's the catch. Peace headlines are the most fragile catalyst there is. If this deal unravels, oil spikes back, the dollar roars, and this entire bit evaporates before the daily candle even closes. That's why this breakout has an expiration date tied directly to geopolitical stability, now, institutional positioning. ETF flows yesterday printed a net inflow of $210 million, the first significant green number in over a week. That tells me smart money is using this dip to quietly accumulate, but they are not chasing prices at these overbought intraday levels. Funding rates across major exchanges are flat, near neutral. That means there is no leveraged long overcrowding yet. No mania. That's actually a bullish underlying condition because it leaves room for a sustained move higher if the technicals confirm. Cross-asset linkage is screaming. The S&P 500 futures are up 70 basis points and have reclaimed their 50-day moving average. Bitcoin is lagging that move by about 24 hours. That lag is normal and it's filling now. The VIX is collapsing. Gold is actually slightly lower on the day despite geopolitical de-escalation, because the real yield move is dominating. Everything is trading like a unified risk-on basket. That supports the bull case, but only if the peace deal holds. For the next 1 to 2 weeks, my directional lean is cautiously bullish if and only if we get a daily close above 67,178. That would target 68,570 and potentially 70,000. The exact invalidation event is a daily close back below 65,070. If that happens, the bear trend resumes and we target 64,353 and then 62,950. So I need your view now. Do you think Bitcoin holds above 67,000 this week? Comment yes or no in the chat right now. I'm tracking consensus live. Type it below. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 distinct strategies, from conservative to high risk, all with exact triggers, stops, and targets. Strategy 1, the sniper. This is the conservative play. We are waiting for a pullback to the newly turned support at 66,261. But we don't just buy the number. We need confirmation. I want to see a 1-hour bullish engulfing candle closing back above 66,300. That shows demand absorbing the sell-off. Entry is 66,300 on that candle close. Stop loss goes below the 4-hour demand zone at 65,800. That's roughly 1.2 ATR below entry, giving the trade breathing room. Take profit 1 is 67,150, just before the resistance cluster, giving a risk-reward of about 1 to 1.7 on that. First target. Take profit 2 is 68,500, for a full reward of 1 to 3.2 risk-reward. This setup is void if Bitcoin fails to hold 66,261 and prints a 4-hour candle close below it. That's your invalidation. The sniper card is on your screen right now. Screenshot it. The sniper, conservative, entry, 66,300, 1H close above, stop loss, 65,800 take profit 1, 67,150 take profit 2, 68,500 risk, reward, 1:3.2R to TP2, invalidation, void if 4H candle closes below 66,261. Strategy 2, the active trader. This is the standard mean reversion play. On the 4-hour chart, the 20-period moving average is now sitting at 66,050 and it's sloping up. If price dips and touches that 66,050 level and prints a hammer or bullish pin bar, that's your entry. It's a re-entry into the new short-term uptrend. Stop loss goes below the swing low at 65,450, just under the daily pivot. That gives a clean invalidation point. Take profit 1 is 67,000, right at the threshold of the brick wall. Take profit 2 is 68,000, a psychological level that coincides with the R3 extension. Once target 1 is hit, move your stop to break-even and trail using the 1-hour 10-period moving average. That locks in a free trade and lets the runner breathe. On-screen trade card now at the active trader, standard, entry, 66,050, 4 HMA 20 touch plus hammer, stop loss, 65,450 take profit 1, 67,000 take profit 2, 68,000 risk, air reward, (1:3.2R to TP2 trailing rule, break even after TP1, trail 1 HMA 10. Now before I give you the high risk play, I want your engagement. Type your Bitcoin high and low range for tomorrow in the comments. Let's see who's aligned. I'm going to track it and call out the most accurate levels in tomorrow's video. Strategy 3, the aggressor. This is the high risk, countertrend trap fade. We short the overbought extreme right at the 67,178 resistance cluster. Entry is on a 15-minute bearish rejection wick or a confirmed bearish divergence at 67,160. Stop loss is tight at 67,350, just above the level that would signal a true breakout. Take profit 1 is 66,500, the first intraday support. Take profit 2 is 66,261, which is the critical floor. That gives you a risk reward of roughly 1 to 3.4. This trade only works if the bull trap triggers and late longs get liquidated. Warning: this is only for traders who can lose small and manage risk aggressively. If Bitcoin prints a 15-minute close above 67,200, the play is invalid and you exit immediately. Aggressor card on screen. The aggressor, high risk, entry, 67,160, 15M bearish rejection, stop loss, 67,350 take profit 1, 66,500 take profit 2, 66,261 risk, reward, 1:3.4R to TP2 invalidation, 15M close above 67, 200 never risk more than 1 to 2% per trade. No positions through high-impact news like sudden geopolitical headlines or Fed speakers. Stops are non-negotiable. This is exactly how you survive to trade the next big move. The single most critical level for the next session is 67,178. A daily close above that and the door opens to 70,000. A failure at that wall, and we revisit 64,000. Tomorrow's wildcard is the U.S. PCE inflation data. If that number confirms the disinflation trend, this breakout gets another leg. If it prints hot, the dollar comes roaring back and Bitcoin's bull trap spring loads. I'm covering the S&P 500 divergence and how it maps directly to Bitcoin's next $500 move in the video that's live right now. Tap the end screen. Smash like if this gave you a clear, executable plan. Subscribe, hit the bell, and I'll see you in the next one before the market makes its move.